Good morning, class. In SS1, you were taught capital markets. This morning, we'll be talking about stock exchange market, which is an aspect of capital market. A stock exchange market may be defined as a market where shares, stock, and other securities are sold and bought. Before stocks and shares which come from registered limited liability companies are sold and bought, they must be approved by the Securities and Exchange Commission, which is the governing body of stock exchange market. Both existing and new stock and shares are sold and bought through agents known as brokers and jobbers who earn commission for the services rendered. Stockbrokers are agents or professionals who execute, buy and sell orders for stock and other securities on behalf of clients. On the other hand, a jobber is an investor who buys stock to only resell them at a profit very quickly. Functions of stock exchange market. One, it is a market for selling securities. Two, it assists companies to raise capital by helping to change the securities to cash. Three, the stock exchange serves as a medium for the dissemination of information to industrialists, investors, etc. The prices quoted in the stock exchange serve as economic indicator. High prices indicate good economic condition and po ten tial investors can take their chances and vice versa. Central Security Clearing System (CSCS). Central Security Clearing System is one of the arms of Nigerian stock exchange market. It is an independent organization saddled with the responsibilities of clearing and settlement of transactions for the stock exchange. Functions of Central Security Clearing System. CSCS ensures clearing and settlement of transactions. Two, it acts as sub-registrar of all payments. Three, it helps to keep financial instruments. Four, it issues central securities identification numbers to stockbrokers and investors. Primary market or first-tier securities market. A primary market is a market for new long-term capital. The primary market is the market where the securities are sold for the first time. It is also known as new issue market. In a primary market, companies issue new shares directly to investors. The company receives the money and issue new certificates to the investors. Method of issuing securities. Method of issuing securities in primary market. One, initial offering or issue. Initial public offering refers to the process of offering shares of a private corporation to the public in a new stock issuance. Public shares issuance allows a company to raise capital from public investors. Two, rights issue. A rights issue is an initiative to existing shareholders to purchase additional new shares in the company. This type of issue gives existing shareholders securities called rights. Number three, preferential issue. A preferential issue is an issue of shares of convertible securities by listed companies to a selected group of persons under section 81 of the Companies Act 1956, which is neither a right issue nor a public issue. This is a faster way for a company to raise equity capital. Securities. Securities are financial instruments which are traded on the stock exchange market. Types of securities. One, debentures. These are loans for long-term nature. Debenture represent the document which acknowledges the indebtedness of a company. They are secured on the assets of the company. In addition to raising capital by the issue of shares, debenture is also used. It has a fixed rate of interest. Debenture is a long-term liability of a company. 2. Bonds. Bonds are securities issued by the government as a way of raising funds from the stock exchange market. Bonds are fixed interest investment securities issued for long-term duration, and they have coupon rates. Bonds have dates of redemption. At redemption, the issuer pays the nominal value of the bond to the holder. 3. Shares. Shares may be defined as the unit of capital of a company allocated to individuals. It is the interest of the shareholders in a company measured by a sum of money. They are issued by quoted companies and are traded on the stock exchange market. It can be grouped into ordinary shares and preference shares. Shareholders are usually paid dividend. 4. Stock. Stock may be defined as a collection of shares into a bundle or consolidated shares. Stocks are usually quoted per 100 naira nominal value, but fraction may be bought or sold. Thank you.